everybody to the CRE Arena. Today I have here with me Reid Bennet, who is the National Chair for Multifamily for the SVN Network, and so that's all across the country. And he is leading a group of advisors, and he is really the go-to for all the multifamily knowledge and really just holding it down. So he's out of Chicago and doing a great job at his firm there. And we are actually at the Partners Circle trip. If you saw the last video, I had Brian Resendez. And we are at the SVN Partners Circle trip, which is probably the top 1 or 2% of brokers in SVN, and probably the top 5% across the country. So I know I feel incredibly blessed to be here. And also, Reid, you've probably been here a few times. This is my first time, but no, great to be here. Great to have Reid on the show. So
I appreciate it, man. And for you to hit it so young, it's fantastic.
Yeah.
And I think actually you made the wrong statement. I think it's the top 1.01%.
Okay. All right. Yeah. Yeah. I have to think it's, I know there's
like 1,600.
1,600, and
I
there's.
think there were 56 that made it.
Okay. Yeah. Well, 10% would be 160. 1% would be 16. Well, 1 2%, I think.
Yeah.
Yeah. They'll check our math and destroy us in the comments. Well, cool, man. Well, thanks so much for coming
absolutely.
on. And before we get started, man, how's Hawaii been? We're on what day did you get here?
I got here Tuesday, so today's Saturday, right?
Yeah.
You forget
yeah,
time.
everybody's lost
yeah,
track.
I mean, right now it is, it's 4 o'clock here, so that means it is like 9 o'clock or 10 o'clock. We watched our games this morning, college games at 6 in the morning, so you lose track of time. This is fantastic. I mean, this is beautiful, and it's great to be rewarded by the company with things like this.
Yeah. And what would you say has been your favorite part so far?
I like the snorkeling thing we went on with the boat.
Yeah, that was cool.
I mean, jumping in, snorkeling, screwing around.
I expected to snorkel because that's what we signed up for, was a snorkeling trip. But the high dive off the double-decker boat,
nothing better than that.
There's some guys that really send them out there.
Yeah.
I don't know if I have any clips. I'd love to throw it in here, but
I have some clips.
Reid's got some sick moves, man.
I haven't done it in 20 years. I went off a houseboat in Lake Powell, and that was the last time. It was probably 20 years ago.
You broke it out, man.
It was a good time.
Everybody, the like fake belly flop move.
The suicide.
Yeah, he crushes the fake belly flop, and like everybody, the flotilla of judges in the water. Yeah. We're all sitting there, and the fake belly flop, and then caving in at the last second. But everybody for sure thought you were gonna flop hard.
Right. Well,
but that's the point.
You gotta give the crowd.
Yeah, that's the point.
But I mean, where else are you going to do that with a bunch of people? And that's the thing that I like about our firm is you get to know everybody, and I've been with the firm since 2008, and so going to all these trips and the national conferences, it's like you get to know everybody, and we're working on 8 deals right now with other SVN agents around the country, from Texas to we have a 826 unit portfolio in Syracuse, New York.
Wow.
With Steven Storer, who's here.
Yeah.
So just being able to, we're basically licensed in 50 states now.
Yeah.
We're part of this network.
Yeah.
And just partner up with all the other agents. So.
Yeah, and that was the big thing for us coming to SVN. Saunders, Dean, Gary, and Todd, we came, I want to say 5 years ago now.
Yeah.
And I saw them, I was with them at the previous firm, which should I guess remain unnamed, but I was with them at the previous brand, and I mean, we were the biggest fish by far, and it kind of seemed like everybody else, there was a couple groups playing at a high level, but I mean, it was traditionally a residential brand, so I mean, they just couldn't get away from the residential side of the business, and a lot of people that kind of did both, which wasn't us and just didn't align with who we were. But once we joined SVN, it's been like, man, everybody is playing at a really high level.
Yeah.
And like going to the conferences and stuff, going to the conferences before, it's cool to be the big fish, but I've heard, say a football coach said it or something, but if you're the big fish, the biggest fish in the pond, you need to go find a new pond. Yeah. Because I mean, you stop growing, you stop learning. But to be around, guys like you, I was with Tony Youssef and Brian Resendez this morning golfing, and to be around groups like that and just everybody, like you said, from across the country. Yeah. I've referred deals, similar, kind of all around the country, and I feel so good about referring a client out to another firm, because everybody's just, everybody's up there. Everybody's playing at a high level.
Well, I mean, especially when it's now close to 70% of deals are going across state lines.
Yeah.
So if you're sitting in your little bubble in your own niche, I mean, some people are able to do it, but you know, with what's going on in the world, it becomes a lot. I mean, the world gets smaller as you go out.
Yeah.
You need to be a part of this. By the way, you guys aren't small fish in this firm. I mean, you came
Yeah,
up
yeah.
pretty quick. So
we did.
it's
We
the
did.
small fish talk.
We did come up quick. And man, that SVN Chicago office is loud though. They're we're feeling the heat.
Yeah.
You know, we've been holding down the #1 spot for a little while now, and you guys got a good group.
Yeah.
I never really knew before the last annual conference.
Yeah.
You guys are rowdy. Like everybody that got called up there, like your MDs and other top producers in the firm. You know, somebody would get their name called or whatever, and there'd be like 7 tables of people that just stand up and like shaking their towels in the air, like they're y'all are an exciting bunch.
It's definitely it's an office that it's fun to be a part of. Just because Al, Michael, and Scott have built up. I mean, I think we have 54 agents in the office now with a bunch of support staff, and it's just fun to be a part of the office, especially when we go to the conferences. We usually bring between 15 and 20 people down, so it's fun.
And so before we get like really into the backstory, like with being in Chicago, just because this is at the top of my mind, with being in Chicago, I mean, obviously, your local market area is dense with the big corporate brokerages.
Yeah.
How are you guys having so much success with the big corporate brokerages? I mean, I kind of know. I've got a taste from my clients of why they choose us rather than some of the bigger corporate firms. But I feel like a city like Chicago, very, very urban, dense area, and a lot of big corporations there.
Yeah.
So how are you guys doing it? What do you think that success has contributed to?
Well, I mean, it's interesting. I think there are a number of ways that people are doing that. The culture that we have at SVN is more of an inclusive culture. It's like we love to go up against some of the other firms and I love to go last because when I'm doing a pitch, I say, I know you met with XYZ, ABC, and all these other firms. Now, the way that we operate, which is totally different than any other commercial real estate firm, is I'm going to turn them into my partners day one, whereas I'm never going to see their listings until about 3 months in when they can't sell the property. And so I think just telling that story, within Chicago, interestingly enough, I started in the neighborhoods of Chicago selling apartment buildings and complexes. And as, when the markets like the ones we're getting out of right now, the really hot market exists, there are 500 brokers in a town, city like Chicago that are all going after the same people. So I actually, and my business partner, Cody Doran, and I, we took our business and started moving out to the suburban markets. And then the same thing would happen there. So we kept moving further and further out. Maybe 3 hours around Chicago is where we're looking. And kind of going into those markets.
I actually, before we did this podcast, I went and read through your bio again, and I saw you had a listing in Belleville, Illinois.
Yeah.
I took first place in the Belleville Red Devils wrestling tournament.
Really?
Little Red Devils wrestling.
Really?
Tournament.
Just outside of St. Louis.
Yeah.
Okay.
So I was born in Alton.
Okay. Oh yeah. No, we sold an 88 unit low-income housing tax credit deal in Alton.
Yeah, really?
Yeah.
So not a lot of people know Alton.
Yeah.
And there was one guy I talked to, but so the whole claim to fame of where I was born is the Alton Giant. Is Robert Wadlow. So there's there's one person every so often that that knew Robert Wadlow, tallest man to ever live. But I did a book report on him, or I did a report on him in, I don't know, 4th or 5th grade. Yeah. And so I know way more than I need to, but 8'11", for those of you that are wondering, because I know you're wondering. But massive man, and we were born in the same hospital, so.
Wow.
But when I saw Belleville, Illinois, I was like, man, I won a wrestling tournament there, and that was my biggest trophy as a kid growing up.
Really?
I was 7 probably.
Take a picture of it. We'll put it in the OM.
Yeah, there you go. This is why you should choose the SVN brand.
Yeah, look, and Belleville's what? It's 5 hours from Chicago. It's still in Illinois. Yeah. But Belleville, that's kind of the typical markets that we're in. So it's like secondary and tertiary markets, areas that you've never. I mean, some of the places we never even heard of. So I'm looking and we have clients that say, hey, look, we had one client we had sold, I think 32 properties for she and her husband. Her husband had passed. We started with him. And we sold the second to the last property for them in Iowa, which was a 212 unit senior project based Section 8 property. And we said, okay, what's the next one? She said, we have these 80 homes that we built for the Army base in Tomah, Wisconsin. Cody and I are like rifling through, because we're on the phone, we're rifling through, like, where the hell's Tomah, so we can have a conversation. We're like, oh, right outside the Army military. So, it happens to be the cranberry capital of the world as well. She's like, yeah, so you guys know it. He's like, yeah, absolutely. So it's 4.5 hours outside of Chicago, so we drove up there, got the lay of the land, and we ended up selling like 4 other complexes, which were basically the whole town of Tomah.
Oh my gosh!
So I love the secondary and tertiary markets, and especially as the market heated up in 13, 14, 15, everybody was moving out of. We had if we had a property in Chicago, we'd have 40 offers coming.
Yeah.
Or more, and so that means 39 or more didn't get it, and so then it's like, where do you want to be? And they're like, well, here's our criteria. And I'm like, well, you're not finding it in Chicago, so let's move out to a suburb, and then let's go to Tomah. I'll get you that return in Tomah.
Yeah.
So that's how we kind of moved out to secondary and tertiary.
Yeah, and then I think I saw one before in Glen Carbon. Did you do a deal in Glen Carbon?
Well,
Carbondale?
maybe Carbondale.
Yeah, Carbondale.
Yeah, that's where Southern Illinois University is.
Yeah, so I was born and raised in Edwardsville.
Oh, okay.
So I spent 11 years in Edwardsville.
Okay.
That's where I was born and raised. And
yeah.
We just went back actually. So my wife took me for my birthday this past year, go up to see, and I've never been to New Busch Stadium. So I went to New Busch Stadium, watched Cards versus Cubs.
Yeah.
Good guys won.
So the Cubs won that game. That's crazy.
That's not bad. So good guys won, but yeah, I got to go see New Busch Stadium. Got to go back to Edwardsville and tour around there and go see that, the hometown. That was a lot of fun. But
that's cool.
Yeah. So to go back. So were you born and raised in Chicago? So like, take us from where you grew up, and then how you got into real estate.
Yeah, I mean, I was born in Coral Gables, and then because my dad was studying to be a marine biologist, and then he. Okay. In order to satisfy his grant that he received, he had to go back to the Midwest and teach biology for like 3 years. He got stuck in Illinois, ended up being a biology teacher and basketball coach, and so I grew up in a town called Woodstock, Illinois.
Okay.
The only thing that's famous for is Groundhog Day.
I was going to say Woodstock.
That's not that. That's Woodstock, New York. But
gotcha. Yeah.
But so Groundhog Day was filmed there when I was in high school, and that was pretty much the claim to fame, other than Dick Tracy, the guy that created Dick Tracy. But
that's funny.
Yeah. So then, I mean, how far back?
So how far? So and how far away is Woodstock from Chicago?
It's about an hour and 20 minutes.
Okay.
Yeah.
And then how long did you live there, and then when did you move to Chicago?
So I moved to Chicago after I graduated from college.
Gotcha.
It's basically where, I went to University of Iowa. A lot of Big Ten universities all kind of converge into Chicago after you leave. And,
is that right?
That's where
it's the nearest big city.
Yeah. Pretty much.
Yeah.
The most exciting city, and so, I moved there in '99.
Wow.
And then so what I did, I had kind of a strange major in college. It was called. It was on the exercise science side, but it was called, I don't even remember what it was called. It was called, this is how much I used my degree. It was a new degree at University of Iowa. It was called
4 years and a lot of money.
Yeah, that's it.
Can't remember.
Holy crap! But the whole premise of it was health sciences, and it was to go into companies and create health programs to lower their insurance costs.
Gotcha.
And so I'll just never forget what my advisor said. She was like, so you're probably going to get a job for a company and you might make $34,000 the first year. And I remember thinking, I was like, that's almost what it's costing a year to go here. So how long? I was like, all right. So I got really discouraged about that in college, and so she had told me that I think my junior year. So that right then a buddy of mine was in business, so I started taking business classes. I got a minor in business, And then I still, when I got out, I was a personal trainer. So I was running a personal training studio down at LaSalle and Wacker in downtown Chicago. And all my clients were real estate guys and attorneys. And so I would just spend an hour with each of these guys listening to what they did to make money. And I'll just never forget the one guy who was a real estate broker. And he would come down and show me his checks that were more than I was making a year. And I was like, this guy can do it? You know, kind of thing. So you have that light bulb go off in your head. And then I got my license and started in that same building, actually.
And you went straight commercial?
Straight commercial, straight multifamily. I never strayed from it because it made more sense to me. You know, because I wanted to buy, at that time I wanted to buy like a 3-unit in Chicago, live in the basement and rent out the top. You know, but then I ended up just selling those kind of buildings and then investing in those kind of buildings with some of my clients, and you know, it just kind of grew from there.
And then so did you ever buy like a small one and live and rent out the other?
I never bought the small one. I started, the first deal I invested in was a 144 unit deal.
That's not that start.
But I mean, I only had a small piece of it. But what I've realized on the brokerage side is, you know, if you, and I'll never forget that deal because, you know, whenever you're just trying to sell somebody a deal, they're just thinking you're a broker. You know, all you want is your fee. You know, you don't care about this. You just, you know, you want to sell it to me, and then if it crashes and burns, you don't care because you got your money. I'll never forget the time that I believed in this deal. It was 18 buildings. It was 144 units. The developer had tried to convert one of the buildings in the heyday of the condo conversions. It was too soft because it was too far outside of Chicago. But what he did was he put the one building back on the market at $150 higher in rent. So then I asked him, I said, well, how much did you put into these units to get that? He said, I don't know, about 3,000. And I was like, holy crap. So 3,000 times the rest of them to get 150. I was like, even if it's a 7 cap, you just made, you know, $1.5 million just on that. So I brought this guy to the property. I was explaining it to him, and he was like, you know, you're just telling me that. I said, look, I'll invest with you in this deal. And just so happened his main investor died at his own Christmas party, had a heart attack. So he's like, I'm out. I don't have the money. And I said, we'll raise it with you. And then the day that I told him that, his whole demeanor changed. You know, he wasn't like, you're just a broker. He's like, okay. So and then we're talking and we're collaborating.
Wow, that's powerful. What year was that?
That was 2008.
Gotcha. So I actually
right before the crash.
Did the property turn out all right?
It turned out great.
All right.
I ended up selling it last year.
Oh, really?
Man,
that's perfect timing.
It's perfect. Beautiful timing.
So I just invested with one of my clients because I've done my own deals, smaller deals, but I haven't been, you know, part of a really big deal yet. And it was a similar situation. You know, I told the clients, like, hey, I really believe in this deal. You know, I'm happy to go in with you guys. And you know, I want to be more a part of the process because I've always been, you know, on the broker side. Like I said, then just bought deals for myself. I never really raised capital. I've had a couple partners on deals, but they're playing at a really high level, and I just think the world of like the guys and the principals. So I said, like, hey, these guys have been doing this for a long time. Have been doing it very well and been doing it the right way. So you know, I want to be you know, a part of this. And that was the first deal that I bought into, and I've learned a ton since then.
At what age again?
28. I might have been 27.
That's perfect, man. That's perfect.
I started, like I said, you know, having a 7 and a 5-year-old. I started young, so I had to. Normally, when people have their heydays in their 20s, I didn't really have any of this. So, got into business pretty quickly, but you know,
you'll be retired before everybody else.
Right. So one of the things I wanted to ask you was in multifamily, and you know, I think we mentioned it before. You know, we started recording was. You said the multifamily sector got really hot in like 13, 14, 15. And that's when I started to learn about multifamily. And that's actually, my first specialty was multifamily. 10 to 100 units. And like in my local market, there just wasn't a lot of velocity. And I figured out that I looked at all of like the average hold times, and like those 10 to 100 unit, 10 to 50 unit complexes, man, people don't sell them. So at least they don't sell them often. At least in Central Florida, like people are holding on to those for long period of time, and there just wasn't a lot of velocity in the product type. So besides that, what do you think did it in 13, 14, 15? What do you think like made multifamily kind of catch on fire the way it did?
Well, I mean, multifamily has been cyclical. I mean, it was hot. So I got in the business in 2001, and so then I was trying to learn it. The problem was I was learning it in a hot market at that time, and the best time to learn it is when it's not hot. Right?
Yeah.
So at the time that I was in it in 2002 through 2007, I guess, was all condo conversions at that time. And so every developer wanted to buy an apartment building, convert it to condos, and sell it in the back end.
Mm-hmm.
And I was 25, 26, and I remember thinking and really believing there's going to be no apartments at all. So I'm going to sell myself out of a job because I had 176 condo converters in my database that I like dug up.
Wow.
Looking at all the building permits on the driving up and down the streets. So I had 176 groups.
Yeah.
Just on the northwest side of Chicago. That's not sustainable, right?
Yeah.
So, I was trying to, we were writing contracts in the hood of my car. We'd go look at a property, and sometimes the owners didn't even want us going in the units, so we'd go in the basements of these old 1920s and 30s buildings, and she'd be like, "Here's the firewall." She's like, "Here's the kitchen upstairs, like right in this area.
Yeah.
Here's the bedrooms. Here's where the soil stack is. So that's the bathroom." And that was the showing.
Yeah.
We're not even in a unit. We're in the basement, and then we go back out to my car, and the guy's like, "All right, give her, let's write it full price. What's she asking?" And I'd write it on my car and go back in and hand it to her.
Yeah.
It was that was hot.
That's
nuts. And we were selling deals so fast there, and then that crashed. So that all stopped because nobody could get a loan to buy a condo anymore. Then it took 8, 9, 10, started coming back a little bit in 11, and then what they say is lenders have 7-year amnesia. So they forgot how bad things were, and so then it started getting hot again.
Yeah.
And it got hot from 13, 14, 15, 16, and it was like, so I run the national multifamily call. We used to do it every month. Now I do it every quarter, and so every month, all my information all the research, it's a record-breaking month. Never been this hot. It was like that for 3 years.
Yeah.
Which I was getting nervous at that time, and then when the pandemic hit, I was like, all right, I'll bet my house. If somebody was around, I would have bet my house that it would have totally died. We would have gone into a recession.
Yeah.
Prices started doubling.
Yeah.
For 20 and 21.
Yeah.
So all we were doing, we're going back to all the people, even if they bought it in 17, 18, 19, we're like, hey, you know how much your property's worth right now? They're like, oh, it's a pandemic. Probably less. And we're like, no, it's probably 30,000 more a unit.
Yeah.
And so.
Yeah, that's nuts. So one of the things, in that, so when I started learning more about multifamily, I was learning through like a lot of YouTube, a lot of read a few books, but I feel like it got incredibly popular around that time.
Yeah.
So I think there's something also to be said about it, about the obviously supply and demand, but and one of the other questions I want to ask you is, I don't want to put it as vague as like how do you feel about it, but in my experience of like the multifamily operators that have come to the market since 15, because a lot of the guys that are buying multifamily and putting out content on there on social media, you got Grant Cardone, a bunch of other guys, and that became it became so cool to be a multifamily investor.
Yeah.
And I sell industrial properties and warehousing.
Yeah.
If I had $1 for every time that I had a multifamily syndicator call me and said, "Hey, I'm looking for a B or C asset in A and B location."
Right, value add.
Yes, exactly.
Right.
So I'd be back here next year automatically,
right.
Just based on how many calls I've gotten. But so with operators like that, it's scared me a little bit, and I think some of those people could be in hot water right now because since 15, like you said, if you bought real estate in 15, 16, 17, doesn't matter what your experience is, what your background is, you probably did really well.
Yeah.
Just by holding real estate.
Yep.
But I'm interested to see kind of what the next 12 to 24 months looks like because it's getting more difficult, especially if those some more of the inexperienced operators,
Sure.
Especially if they have adjustable rate mortgages.
Yep.
But I know the guys that have been in the game for a long time, they have discipline in their underwriting and have sort of done it well. So have you? And I don't want to say have you dealt with any inexperienced operators, but have you? I assume you've seen that wave of inexperienced operators, and it become more of a cool thing. And one thing that's bothered me slightly was like I felt like it was. Like I talked to some people that were kind of irresponsible, like they were just getting into it and then they were raising $10 million, $20, $30 million, and they've never like sold a real estate deal, not even like a real estate license and sold a house. So what's kind of been, because obviously the people that, you want to deal with are, dot their I's and cross their T's, they've been around the block, they know all those things. So, how is that wave of new owners and syndicators like coming into the multifamily space? How has that like changed the landscape, and how has that changed like your job, and what have you seen with that in the past 5 years or so?
Yeah, well, you have about 25 questions in that one statement.
That's my bad.
But no, I mean, well, first of all, with multifamily, I think it's the CRE food group that I think people understand the most, right? Because everybody's lived in an apartment or a home, or everybody's at least rented. One of those two things. You live somewhere, and what I always say is, with this market, retail, we're all shopping online, right? Office, we're working remote online. Multifamily, you can't live online yet. So, I mean, as long as, well, some people do.
Metaverse,
right. And until you can sit there and go home and collapse yourself into a phone booth and you think you're in a 20,000 square foot mansion, multifamily is going to be the place to be. But I've never seen this many syndicators come into the market that don't know what they're doing. And frankly, if I see a syndicator be, like we were talking about, 40 offers coming in a deal. If I see syndicators that I don't have a track record of, that I've seen them close 3 deals, they don't make it to the top. Even if there's, sometimes they're just stupid outlier money. If they haven't raised all the capital that's sitting there, I would never go with or suggest that an owner go with a syndicator. Maybe that's some of the owners, they're like, I don't care, I just want the most amount of money, I don't care. But what we do as advisors and brokers is, you don't want to get involved with a group, select the wrong group, be 2-3 months down the road and they can't raise their capital, or something happens with them, or we hit a market like this and they're out. Now you just lost. My dad being a teacher and a principal, he was telling me, and he's only bought 3 houses in his life. He's like, you just don't go at the highest price. I said, no, because you go at that highest price, you get down that road, now you're screwed up. Now you have to go back to number 2 and 3 and 4 and say, this guy blew out, let's get, and they're like, what's wrong with the property? And now my offer is $2 million less. Now you just, you put the owner in a bad position. So that's kind of the way I felt with syndicators going into the beginning of it. If they didn't have a track record, and that's one of the things that we do, when we get it down to like the top 2 or 3 or 4 groups, we'll have them submit the resume of the top, or the most recent 3 transactions that they've sold, or that they purchased. And we want references, meaning, give me the brokers, give me, the best one is the seller. And most of the time, most of the time we know the seller, right? So we'll call them and we'll say, hey, how was Augie on that transaction?
Did he retrade?
That's the thing. Because most of the time they're like, if he did everything he said he was going to do, they're usually like, he did a good job and closed. But if he didn't, I'm going to be on the phone with them for 20 minutes hearing about, this guy got me to the closing table, started retrading me, $1 million, or else he wasn't going to close. I already had my 1031 exchange lined up. I had to close, so I had to, they're never going to be quiet. So,
No, that makes sense. Vetting buyers is a real thing. And you got to do your due diligence on before you select somebody, just because fortunately, this is a great game to play, and I love being in commercial real estate. But it's no secret that it can be very lucrative. There's a lot of money thrown around, and when that happens, there's more people want to play, and not everybody has the strong ethics and morals and track record and some people are fly by night or want to make a quick buck, which you really gotta, especially like the sellers, because there's one seller and there's 40 buyers from the deals you've had lately, and the sellers, they're legit. Like, they own the asset. Yeah. And a lot of times it's like they've worked incredibly hard. Like you said about the husband and wife, like they've spent their entire lives of like, of accumulating wealth and investing and being disciplined and investing in these assets. So it's something that means a great deal to them. And they've sometimes spent 10, 20, 30 years, and sometimes it's more with multi-generational capital and assets. So that's something that's it's a great deal of responsibility.
Sure. I mean, if you're in the long game, you just don't want to take the quick deal or something that's going to. I mean, and that's a lot of brokers have shiny object syndrome, right? Where you're just trying to find you want to get involved with the person that you think is just flashy, like you said, throwing the money out, and I'll close that deal no problem. The best, my favorite is when somebody you meet for the first time said, "I never retrade." They're the ones that are going to retrade for sure. It's just like a seller that says, well, I don't need to sell, but I want you to go out. Okay, so when you tell me I don't retrade, you're going to retrade, and when you say I don't need to sell, the seller needs to sell.
Yeah. No,
so
exactly.
But I mean, we're in it for the long game. Yeah. And I've been doing it for 20. This is my 22nd year. Yeah. Of doing it. So I've seen people come and go that tried to do it quick, and I'm sure you'll be in the long game too. Yeah. No, that's how I've been set up, and I try to tell other people getting in is, and I think a lot of times, especially younger folks, they focus so much on what is the right path, what is the right industry, like which industry is the most lucrative, or can you make the most money, or those questions go around all the time. Yeah. And I mean, go check out. I mean, granted, there's a lot of the top 100, 200 wealthiest people in the world. A lot of them do have real estate next to their title, and maybe that's not their first business, but they do real estate. But I mean, you can make money doing anything. Right. I mean, that's no secret. But all the people on that list and some of the wealthiest people are just most successful people in their craft and have generated significant wealth. They've done it for a long period of time. Sure. So I think that's one thing that a lot of young people get. It's like, man, they want the success yesterday, or they want it in 12 months or 6 months, 8 months. Yeah. And to see, I've probably taken like one of the fastest tracks that I've seen. I'm incredibly fortunate. Yeah. But it was 2 years of making very little money. Yeah. Of like, making very little money and trying to feed a family of 4. Yeah. And just like just saying, hang on, like let's fight, let's hang on, let's hang in there, let's keep fighting. Yep. Because I truly believed in it with everything I had, that I could do well in the industry. But it took 2 years of making nothing. Yeah. So. Well, I mean, that's we have younger people that want to get into real estate, and when you tell them, you might, most likely you won't make a paycheck for the first year. Mm-hmm. You're not going to be making any real money until the second year. Yeah. You kind of blew that away, but. The way that I would look at it is, this is, if you went to go get your MBA, you'd be 2 years where you're paying money to learn. That's the thing I like about the broker's side of things is, you and I get to see, 50, 60, 70 different people analyze and how they analyze deals. Yeah. And rather than just like trying to go out and buy one deal yourself and trying to learn from the books, and we're watching different people, and I've seen the ways different groups do capital stacks and like utilize S&P bonds and all these different kinds of structures. Yeah. I was like, how can you ever you'll never learn that if you're just sitting there reading books, but you're watching how they do it, how they manipulate the different aspects of the deal. Right. So there's no other career that you can do that than this. And you get. Yeah, that was one of the things that when I got into this business, I knew I wanted to buy real estate and be a real estate investor and own real estate for myself one day. And that was when I first got into the industry was I wanted to do that, and I knew this was the best way to like see it firsthand. Yeah. And that's what I still tell people, even a guy that wanted to start syndicating money and then buying multifamily deals. I talked to him probably for an hour like a week ago, 2 weeks ago. And I told him, hey, I truly believe the best way is to be a broker. Yeah. Because you get, firsthand look. I mean, when you come in,
before you transact deals, you have to learn the business.
Yep.
And you're under somebody, you're a junior broker, an intern, assistant, whatever it is, but you provide value. Hopefully you can hang on and make a little bit of money, but you learn as much as humanly possible. And then, when you get your shot to go help people buy and sell, that's when you get the firsthand look, and you're there providing value in the local market knowledge, and you get the front seat. You're like co-captain or to watch this deal get transacted, and also so you get to learn it, better than anybody else, and from a variety of different people that are incredibly talented, that have built significant wealth.
Sure.
And then also you get paid to do it, and you get paid pretty well.
Yeah.
So that's what I tried to tell this guy I talked to the other day. Was like, man, I really think I actually hooked him up with Perry. He's in the Phoenix market, and I said, hey, go talk to Perry and see if he's got to say, and check out the people in his office, because I think brokerage is an incredible route to go, something that's been obviously worked out really well for me, and I know a lot of other people as well. So so for the younger people, other than telling them to play the long game, what would you say, like in the first 2 years of brokerage, like the young people need to be focused on the most, especially in the multifamily sector?
In the multifamily sector, well, I think you need to pick. You have to pick the niche. So if we're already there and you pick the multifamily sector, there are a number of different sectors within multifamily. Because what you'll realize is, you can't be. It depends on what market you're in. If you're in a much smaller tertiary market, maybe you can be a generalist. But if you're in, even a secondary market, you have to focus. And then, because you need to collapse your world rather than expand it. I mean, we have over 22,000 people in our database. And for the longest time, it was kind of daunting to open it up. But once I collapsed it down to the groups that owned 3 or more properties in my market and have transacted in the last 10 years, it shrunk that group down. Because they're the ones that are most likely to transact moving forward. Right. And then once you to get them on a call schedule, because the worst thing that can happen in your career is when you see, from all of our research, you see a new comp hit that was sold, and you knew the buyer and you knew the seller, and then you go back to your database and you're like, I haven't talked to either of these guys for 13 months or a year and a half. It's the worst feeling in the world. So get the people on a rotation and make calls. I mean, if you're going to be in the business and you're not making calls, I mean, it doesn't matter whether it was 1970, 1980, 1990, 2000, 2020. The phone's still better than social media, like we were talking about. We have brokers in our office. That's all they do is they sit on the computer and try to put stuff out on social media and don't make one call. You're never gonna make it that way.
No, I agree 100%, and I can like apply this to a lot of different scenarios, and not only real estate but in life. But to hone down on like cold calling and prospecting, I was telling my junior broker the other day that the hardest task to do, and also the task that you fear most, and you can like receive the highest level of rejection. You don't want to do those tasks. Like that's the highest one on the list. Right. It's high risk, high reward. Right. So it's also the most rewarding. So calling a multifamily owner that owns 1,000 units in your market, and say if you're a younger guy, right? And say you're a younger guy, it's like, man, that is like, I don't want to call this guy. This is kind of scary. He's gonna whatever. He's gonna sham you. You're gonna get yelled at, whatever. And that truly doesn't happen often at all. But it's the Mark Twain thing. A lot of bad things have happened to me in my life, or I've experienced a lot of bad things, but only a few of them actually happened. So that we play over in our head over and over again, especially like being younger in the business, but getting over that hump of like to do those things that you do fear. And because I've noticed in my own life, it's like, hey, when I push myself to do the things that I fear most, that's when you take the furthest strides. Especially because it's a very competitive landscape. So like if it's fearful for you, it's fearful for me. And so like the other guy, and in every office in your city. So to do the hard things and to do the things that, like I said, cause you the most, like anxiety, you don't want to do. It's likely that your competition doesn't want to do them either. But the difference in being okay, average, or being great is to do those things over and over again and be disciplined.
Sure.
Disciplined about it.
Well, and for you're talking about for the younger brokers. I mean, you need to, first of all, you have to understand that we're not selling vacuums. We're not door-to-door salesmen selling vacuums that people don't need. If you get in your head, I would say a majority of the the owners out there that understand and really know and appreciate brokers and agents in the market, they don't know if that 22 or 23 or 26-year-old kid, maybe he somehow gets me a deal, so I'm gonna give him the time of day. You have to understand, there's gonna be people that are just clicking off because they're getting called 20, 30 times a week. But the other thing they have to know is you need to bring some value to that call. The days are gone where you just call and say, hey, do you want to sell 123 Main Street? Do you want to sell 123 Main? And just keep calling these people. That's the worst call to ever make. But if you're saying, hey, look, there's this deal that just closed down the street from 123 Main Street that I think is going to have a direct impact on the value of your property. Yeah. And first of all, that's the best voicemail to leave too. Yeah. Because
the curiosity.
They don't know whether it's a negative impact or a positive impact, right? You know what I'm saying? Yeah. So it could be like this one. It's a fire. Like the market's a fire sale right now. Yeah. We need to figure out how to help you with it. As long as you're helping these owners. Yeah. I have because I'm even coaching a few brokers right now, and they're just like, well, I'm just going for the meeting. I was like, look, you have no sales. You have no experience, and you're trying to call this guy that owns 60 properties, and you just want to get a meeting with him to do what?
Yeah, no shot.
So if you're saying, look, I don't like what CoStar, I don't like what LoopNet or Yardi Matrix. I don't like what their rent comps don't seem accurate. So what I'm doing is I'm starting my own rent comps in whatever little market you're doing. So I'm happy to share it with you. I mean, that's just the easiest way to do that. Or this is what's happening, or here's what we're seeing with the inflationary situation with the expenses. I'd like to share with you how many of the other owners and operators in multifamily are experiencing this market. Right. People will listen to you. Yeah. Or at least talk to you a little bit.
Yeah, you'll get much further in a conversation like that than just, hey, do you want to sell? Yeah. Because, and unfortunately that's what a lot of the other brokers do, because I think that's, and that's one of the, it's like ripping off the Band-Aid almost. Yeah. Like maybe one out of every 100,000, one out of every 10,000, you might get a yes or like a, hey, what's it worth? And some curiosity there.
But that's tough, man.
Yeah,
I mean, that's tough.
It's very,
but
very
the one that says yes, and it's funny because I brought on a junior and he was making all the calls and doing everything for weeks and weeks and weeks. And then he comes in my office, he goes, this guy has 212 units, and he just said, yeah. And he goes, I didn't even know what to say to him. So I got off the phone. So I was like, okay, now we got to call him back. And we ended up listing that deal. Yeah. But, it's just, he was so shocked that he got it, yeah, sure. I'd love it. And the guy said, if you would have called me yesterday, I wasn't a seller. But this morning, my LPs, they want their money. Wow. So, and that's the other thing. It's all timing. Yeah. It's all timing. You can call 10 different brokers can call that guy yesterday, but something happened last night in his life, in the property, something that just made him say, look, man, I'm out. Yeah. But, I know, or, what is it worth? Yeah. And then it's just, but you never know when you're going to have that conversation. Right.
Yeah, the timing, timing's everything.
I mean, you can bat like 50. Forget about batting 400. Yeah. You can bat 50 and be top of the game.
Yeah, you can be here. Right, Partners Circle. Right. So totally makes sense. So for you now, and I know this won't really relate to the younger folks that are listening, but what does your day to day look like? From wake up to go to sleep. What is your normal day of the work week look like?
It's a good question. So like the normal day, and I try to do we talked about time block before we got on and how much you don't like it. I try to stick to it as much as possible.
Oh yeah.
Because if I get off of it, and occasionally I'll do like coming here, it's going to take a while for us to get back into the groove of things when we get back home. Yeah. But once you do, so a normal day for me, waking up about between 5:15, 5:30. I have a first grader. We have to help him get ready. He's usually waking up about that time, unfortunately, as well. I have a Rhodesian Ridgeback that won't sleep unless we have blankets on her, so she usually wakes me up too. So I haven't had an alarm for probably 4 years.
Yeah.
So get up. I usually try to work out in the morning if I can, and then my goal is to be in the seat by 8:15, and because you need that startup time, and then we're trying to do 2 hours of calls a day, and then deal maintenance in the afternoon.
Yeah.
So I've been working from a home office for the last 2 years.
Really?
I brought all my stuff home, and in fact, I've just built an office.
Oh, really?
Or in the process, it's almost done.
In your house?
Yeah, well, it's on my property.
Gotcha.
So I needed a little bit of separation, but
Yeah.
still have an office, downtown, the Chicago office. So
Yeah.
we're gonna meet clients down there and whatnot. But
Yeah.
I try to end by 5:30. Have dinner with my family, and then sometimes I'm back on doing research at night and can't make any calls.
Yeah.
That's my day.
Makes sense.
It's a typical day.
Yeah, so you told me about a video before we got on here, and I didn't see it, but you said the top 3 things that, would you say, the best multifamily investors do?
Well, I was telling you about when I first did video content.
I just want to know the 3 things. You told me,
Okay.
I know cost seg was one of them.
I said first of all, you need to have your book. Now you're trying to make me remember that thing.
We won't link
Yeah.
the video so they can't,
Right,
they can't check you.
Right. So I was trying, getting your property, their curb appeal up, because I have some owners and operators that they do the insides, they keep really good care of the insides, but they don't do anything to the signage, to the outside. So they have potential buyers. It's the first thing they see, or potential tenants.
Yeah.
So it was, one of the things was, make sure your curb appeal is up, because there are so many things that you can do on a monthly basis to make your tenants and make prospective buyers, know that you care about the property.
Yeah.
And then the other one was, you should be utilizing cost segregation, because ever since the Tax Cuts and Jobs Act of 2017, most of the owners and operators I talk to that use it, they're like, I can't believe this is legal.
Yeah.
Just because the accelerated depreciation and the time value of money that gives these owners to be able to not put that money towards, throwing that money out, but to accelerate that depreciation and utilize that money to buy more assets.
Yeah.
And I had posted that and said cost segregation, and somebody had linked it to Yona Weiss, the cost seg king. And so once he made a comment, it went out to like his 30,000 people, and then I had, there's a ridiculous amount of people looking at it, which is, I think what you're doing with LinkedIn as well.
Yeah.
You don't realize it.
Yeah.
Somebody asked me, how do you monetize, presence on social media?
Yeah.
So, I don't know. I can't think of one deal that we had put out or had mentioned something in social media that it came back that some person from Singapore saw it on LinkedIn and bought it.
Yeah.
But what it does do is, I'm calling people that I've never talked to, and they're like, "Oh man, I watch your multifamily minute,"
Yeah.
And so it's like, and I was like, once that started happening, I was like, "Oh my gosh." It's pretty powerful.
It's the same way that Nike monetizes a billboard.
Yeah.
It's like you just see
You
it.
have no idea, right?
You just see it going on the street. When I see a Nike swoosh or something on a billboard, I'm not like,
Right.
I need to go buy a new pair of
Right.
Nikes.
Right.
But I mean I've just seen it so many times.
Yeah.
It's just brand awareness.
Yeah.
I mean, being on social media, it's a more concentrated audience. So if people are, whatever the audience is, younger or wanting to be in commercial real estate, whether they're investors, brokers, lenders, whoever, it's
Yeah.
like, oh, that's Reid Bennet, that's the multifamily.
That's right.
I'm Chicago. So
it makes the cold call a warm call.
anything you can do, and that's a big thing, is like, man, going through that list and trying to get the cold calls to the warm calls, because nobody likes cold calls.
No, it's huge.
But warm calls are a lot better.
Yeah.
So no, I completely agree. So before we go, what is one book that you've recently read or you would just highly recommend and it can be outside of commercial real estate, but business, entrepreneurship, finances, self-improvement, development.
Yeah.
What's one book that you would highly recommend to the audience?
Well, if it's going to be on self-improvement, so the last probably 10 years, that's all I read was real estate books and different books on self-improvement. And if it's going to be that, I'd say Never Split the Difference was a really good book.
Okay.
It was written by a hostage negotiator. I think it was for the CIA.
Yeah.
And it was just fantastic the way this guy went through. You know, you have to win. And then you have to feel that they're winning as well.
Yeah.
You know, so it was a fantastic book. I would highly recommend it.
Yeah.
On the trip here, I read a book that I've never bought a book that it wasn't about self-improvement real estate in 10 years. It was called In the Weeds. It was by Anthony Bourdain.
Okay.
You know, it was a really unique story of another guy that was at the top of his game, unfortunately. You know, he had a tragic ending, but you know, it just talked about somebody else that was at the top of their game and how the guys behind the cameras viewed him and viewed his situation, which is pretty incredible. If you've ever seen that, any of his, you have to check it out.
In the Weeds.
Yeah, well, that's the book, but it was No Reservations was his show.
Gotcha.
He would go into the most unique places around the world and eat their food. But anyway, that was an interesting book.
Very interesting. That's good. I'll have to check those out.
Yeah.
Thank you so much for coming on. And
appreciate you.
Yeah, man. And where can people find you? LinkedIn.
Yeah, LinkedIn is a great way. I mean, the SVN website.
Yeah. You're all over the place.
Yeah.
It's at SVN multifamily.
Yeah, I mean that's the thing about LinkedIn is if you Google yourself, which LinkedIn will probably be the top one or the second one.
Yeah.
So
they pay a lot of money to it.
That's right.
Advertising dollars. So.
That's right.
Well, awesome. Thank you so much for coming on, and
Absolutely.
we'll see you next time. And thank you for tuning in. We'll see you next time as well.